Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes confusing world of corporate filings. Today we're diving into a recent report from M-tron Industries, and trust me, it's not as boring as it sounds. We're talking warrants, triggers, and expiration dates. Don't worry, we'll break it down so everyone understands. It's like a treasure hunt, but instead of gold, we're digging for information about a company's future. Tron Industries, a company incorporated in Delaware, recently announced something interesting. They're giving out warrants to their shareholders. Think of warrants like coupons, but instead of getting a discount on groceries, you get the option to buy company stock at a set price. These warrants are being issued under an agreement dated April 25, 2025. Basically, if you own shares of M-tron stock on March 10, 2025, you're getting these warrants. For every share you owned on that date, you get one warrant. Each warrant lets you buy one share of M-tron stock, but there's a catch. You can't just buy the stock for free, you have to pay what's called the exercise price, which is $47.50 per warrant. Now here's where it gets a little more complicated. These warrants aren't good to use right away. They only become exercisable or usable on a specific date. They call it the effective date, or when you can start using the coupon. That date is determined by either of two things. The first way is if 30 days before April 25, 2028, also known as the calendar expiration date. The second way is if the company's stock price, specifically the average of what is called the VWAP or volume weighted average price, is $52 or more for 30 days in a row. They call this the trigger. If the stock hits that price, then you need to use those warrants fast. Once that trigger happens, you only have 30 days to use your warrants. If you miss that deadline, they expire, meaning no discount shares for you. The warrants will expire either on April 25, 2028 or 30 days after the trigger, whichever comes first. If you use all your warrants, you get a bonus. It's called an oversubscription privilege. You get to buy any shares that other warrant holders didn't use. The company can change the exercise price. They might also change the number of shares you get per warrant. This can happen if they issue dividends, split the stock, or do other corporate actions. This protects the value of your warrants. The warrants are expected to trade on the NYSE American Stock Exchange under the ticker symbol MPTIWS around April 30, 2025. So you can even trade the warrants themselves if you want. This whole explanation is just a summary. The real details are in the official warrant agreement, which is attached to this report. So if you are thinking of using your warrants, it's always important to read the fine print. This report isn't an offer to sell anything, it's just information, so don't make any investment decisions based solely on what's written in the report. It's always a good idea to talk to a financial advisor before making any moves. This report also includes what are called forward-looking statements. These are predictions about the future. They're based on what M-tron Industries knows right now, but they could be wrong. Lots of things can change. To know more about the company's risks, check out their other reports filed with the SEC, like their annual report. The company included a legal opinion in the filing from Barnes & Thornburg LLP that assures everything is above board and legal. And now, let's zoom out and look at the big picture. Tron is handing out these warrants to try to raise money in the future. If the stock price goes up, people will use their warrants to buy shares and the company gets a cash infusion. It's a way to get investors excited about the stock and potentially raise capital. Here's my take. Tron's strategy is a bit of a gamble. They're betting that their stock price will go up. If it doesn't, the warrants are worthless and they don't get any extra money. The biggest risk here is that the stock doesn't perform well. The oversubscription privilege is a smart move. It encourages people to use their warrants because they might get even more shares if others don't participate. Overall, this move shows M-tron is thinking creatively about raising capital, but it's not a guaranteed win. The company's success depends on their ability to drive up the stock price and convince warrant holders to exercise their options. If I had to give an assessment of the company's direction, I would say they are cautiously optimistic. Thanks for watching Corporate Decoder. I hope I made this report a little less confusing and a lot more interesting. Don't forget to like, comment, and subscribe for more insights into the world of corporate filings.